with this particular market, what we saw today in the GDP numbers was first off a historic number where we had last quarter a historic low around 31%. And this morning, the numbers that came out were over 33%. Now, this is great news. It's historic growth here in the United States in terms of our GDP, but it's still a little less, not as good as the end of 2019. So there is room for improvement, but this coupled with the durable goods numbers that came out, in durable goods, it was showing us that it was the fifth month in a row of growth, businesses ordering their goods. And it was also showing that this is not only a consumer-driven market. So all these positive signs are pointing to the turnaround of this economic recovery starting and moving the market on the upside. Although it may not be apparent immediately, the long-term effects of this turnaround are definitely going to start to be felt as we pass the elections and go Q1, Q2 of 2021. So the jobless claims came in much better than we had anticipated. Although before the pandemic, the numbers are not as good as we had hoped. However, there is plenty of room for improvement. The GDP, the durable goods, and the jobless claims together are signs pointing to that not only is the economy turning around, but the markets are going to start turning around. I think the malaise that occurred this week in the market had more to do with people who were taking profit on gains that they had, and at the same time responding to the new cases. You're right, we had 40 states reporting higher COVID numbers, and that is a worrisome problem. But with all the indications, we've had the furloughs in jobs, we've had some bad news, but all this points to the signs that it is turning around and that we are starting to see the light at the end of the tunnel. It's just not going to be quick as some had hoped. We glean from the market who the winner is going to be this market. I say that would be a neat trick. It really doesn't work that way. As a matter of fact, markets at this particular point, and I know I'm not the only one who thinks this way, and it's been quoted in several publications that the markets on average, whether it's a Republican or Democratic winner to the elections, have gone up anywhere between 3 to almost 4%. And that's regardless of who wins. The market was before digesting information and is still digesting some economic numbers, but the signs point to this recovery, that it's going to keep moving on the upside. I think what you're definitely going to see before the election is the volatility that we've talked about always. Market doesn't like uncertainty, so the VIX indicator or the volatility index in the market is going to be super volatile before the election, and then afterwards that should abate somewhat. Volatility is always a constant in the market, but with what we're seeing here, we should start to see even more positive news after the election's over, because we'll have that uncertainty completed at that time. You know, to a point, this isn't the first time this has happened. So if you remember with Bush and Gore, we had a contested election and the markets were uncertain then. And as we got closer to a decision, the markets corrected themselves and it went back up. I foresee the same thing happening here. Unless it's a landslide on either side, we're going to have a contested election. We're going to have that volatility increase along with the markets being uncertain at that point. However, it's more important to focus on your own particular personal situation financially, and remember that these are short-term events, and long-term wise, the market has always rewarded investors for being involved in the markets on a long-term pace. You know, some people, they're in it for 2 days, but most people are in it for 20, 40 years. I'm advising my clients that we not take any big bets on any sectors at this point. We are making slight adjustments to the portfolio in areas that we feel make a lot of sense, like technology, like consumer cyclicals, like consumer goods. So those are the areas that we're looking at to not make a big position, but with the positions we already have, perhaps to add or subtract to. All right. And you can't predict what's going on forward. All you can do is take an educated guess based on everything that's been presented. But at the end of the day, you make an educated guess and you prepare yourself for either scenario happening. That will help you long term. And because it is short term in terms of this is just one event of many, that could be helpful going forward.